Elena, tell us a bit more about yourself.
So yes, I come from Belarus and living now in Ireland. My original background is linguistics and language teaching, and followed on by IT management. But now I'm interested in blockchain. It's my hobby, and I'm just fascinated by the technology. And that's why I enjoy doing the Sunday night meetings, where I can ask any question I want. And I also like educating myself about it. So that's why I'm very happy to be here at this podcast, at this Zoom meeting today. And I'm looking forward to questions that will ask and that I will ask.
So Will, let's start there. Will, tell us a bit more about yourself and why you're here today.
So the two reasons I'm actually interested in what we're going to discuss. The one is purely from a fascination, and I have a technology background, having worked in various forms of technology and fintechs and different types of architectures in the past. And I have a curiosity of how it all works. But having now moved, and when I say recently, at the beginning of this year, I stepped away from a corporate career of some 25 years to focus purely on well-being, performance, and resilience for people. So literally setting up an offering and a business from scratch. Now, I have a bit of capital to work with. And the other point I'm interested in is obviously the investment and return potential within a Bitcoin or currency. Sorry, there you see a cryptocurrency in a blockchain world. So I'm looking at this from a perspective of absolute basics. Right? I know that there are cryptocurrencies. Lovely. I don't exactly know what they are. I know there's value in them, but I also know there's risk and volatility in them. I know the world is maturing around it, but I don't know if it's maturing to a point of low value or if it's maturing to a point of great value. I don't know. Things like blockchain, I think I understand in concept, but not really. What an NFT is, I know it stands for non-fungible token, but actually what is it? Those types of things. It's real basics, because I would actually like to experiment and become a part of this world by investing a little bit in it and seeing what happens. So that's why I wanted this conversation, Gary, when we spoke, or at least interchanged messages some months ago, because in this move from a corporate career with a solid, pretty decent earnings into a world where I'm building from scratch, and it's a new offering and it's a new approach to something that I need to convince people is actually very usable. I need to see how I generate income and invest for a good return, and see if this is an option.
Okay, so what I'm going to suggest, well, I'll give you a little bit of my background, which will help put this into context for anyone who's watching this or listening to this. The first thing I'll throw in straight away, and it should always be in big red capital letters, none of anything I say is financial advice or investment advice or legal advice or in fact any other advice at all. It's just opinions in many ways. My background is that I've worked in multiple industries, multiple sectors, all around data and technology. And ultimately, blockchain is using technology in some way. I became an independent consultant about 6 years ago. Moving into the blockchain and crypto space. And it's interesting that I think we're going to be talking about two slightly different topics between us today. One is the blockchain world and one is the crypto world. And they are interweaved with each other, and we'll go into that a little bit further. But when I first came into this area, I realized that blockchain there was a buzz about 2014 in the city of London talking about it. And I started going to events, and actually most of the time I did not have a clue what people are talking about. It was all jargon rich, it was complicated, it was difficult to understand things. And over time, I eventually realized two reasons why I didn't understand it. First of all, because the people talking about it were talking about it at an incredibly technical level. So you'd hear things like Merkle trees, Byzantine fault tolerance, and it's like, what on earth is this? Really confusing. And the other thing is that people talking about it didn't know what they were talking about. You know, they'd read a book or they'd heard an article or whatever, and they were blagging it. So it's a little bit of kind of the imposter syndrome. So I started learning about it, looked at the blockchain side of things, because that's where I thought the new world was going to be. Cryptocurrency kind of falls out of that. And so started getting into crypto a few years ago. And I've been running events and everything ever since. I love sharing knowledge and helping people develop. So what we'll do is for this session, what's just maybe, I'll give a quick minute or so of a background about Bitcoin, blockchain, and these kind of things. Will help us level set the scene. And then I'll ask both of you, if at any point I use anything jargonistic, if I use any buzzwords, please hold your hand, you know, shout and say, Gary, you know, please explain that. Because
you won't have to ask me to do that. Don't worry. I will.
So this is great. So we think about, you know, Bitcoin and blockchain and crypto. We use those terms kind of interchangeably, and it all started in the main area around 2008, 2009. There's publication of a white paper by a fictional character called Satoshi Nakamoto. Ultimately, it was talking about a new way of electronically providing a means to transfer value peer-to-peer without an intermediary, which was censorship resistant. And that doesn't sound a big deal, but it is quite profound. If you think about it at the moment, how most of us make payments, apart from cash, it normally involves an intermediary. So it involves a bank, a building society, a credit card company, PayPal, whatever. But this thing called Bitcoin used a different mechanism to do it. And it used what is now known as a blockchain. All blockchain is it's a software protocol running on a large number of computers, keeping them all in synchronization with each other through a process called crypto mining. And this is where you'll hear lots of computers all whirring away, trying to solve this puzzle. And the first one to solve the puzzle gets a reward. And that reward is cryptocurrency. So in the Bitcoin blockchain, for example, they're rewarded Bitcoin. So when Bitcoin came out in 2009, you got 50 Bitcoins for every puzzle that you solved. You think about in those days, a Bitcoin was worth 0.0001 cents, so it's hardly anything. Eventually, someone actually bought a couple of pizzas for, I think it was 10 Bitcoin or something. So it shows how things have changed. But ultimately, cryptocurrency came about as a way of being a financial incentive for people to take part in this network. And so it's kind of a byproduct, really, of blockchain, which is bizarre because it's taken on a life of its own. And now it's used as a means of value transfer. And some people use it as a means of value storage. And this is where the thing about investment and this kind of thing comes in. So I have to be careful. You may remember the old FSA, as it was, the Financial Services Authority, used to insist on little words at the bottom of any financial advert that said, past performance should not be used as an indication of future, blah, blah, blah. It's very true with crypto. So now we're in the situation where we've got cryptocurrency. Then we've had other spin-offs. So you mentioned NFTs, non-fungible tokens. We can maybe talk about them later on. But they're a programmatic version of cryptocurrency. So you think of cryptocurrency is like, I describe it as electronic money. NFTs are tokens, so they're programmable, so you can do clever things with them. And we'll maybe explore some of that a bit further. So for both of you, is that a kind of an initial level setting of, you know, we've got blockchain as the base layer, and we've got cryptocurrencies such as Bitcoin or Ethereum or Dash or Monero, all these other cryptocurrencies you might have heard of, all operate in a broadly similar way where they've got the technology underpinning it. Quite often they're based on very similar software. You know, you can actually take a copy of a Bitcoin blockchain protocol, you can copy it, you can create what's called a fork, and you can create your own version and you can run it. So this is why we've got in the crypto world, there's BTC, the code for Bitcoin. There's also BCH, which is Bitcoin Cash, which is a slightly different version. There's BSV, which is Bitcoin Satoshi Vision. And there's various others. They're all based on the same software, done some changes, spun off different networks. So that was a kind of a whirlwindy type basic primer. So Will, straight away, you've got a puzzled expression on your face.
Yeah. Good noticing. I think the bit that's got me is I understand all of that, but I'm a little bit befuddled by this mining and puzzle solving bit, because that seems to be what signifies the allocation of value, right? So that, so what's in my head is, what do you mean by puzzle, and how does that get kicked off? That process get kicked off?
Yeah,
to actually go and solve a puzzle to realize the value.
So the way it works, I've actually got a video explaining how Bitcoin works in 5 minutes type thing. It is a topic in its own right, and this works for any blockchain that is secured using a protocol called proof of work. But there are different mechanisms. You'll hear proof of work mentioned with some of them, and what this is that in Bitcoin's case, and we'll talk specifically about Bitcoin, it kind of applies to the others as well, is that every 10 minutes, a chunk of data called a block is submitted out to the network. And in fact, the network software actually manages it itself. It fills up a block of data. That block of data goes out to all the miners. They have to solve a puzzle, which is using cryptography. So it creates what's called a cryptographic hash. And whoever comes up with the right answer first gets the reward of the Bitcoin. That's treated as a valid block. That's laid into the database. And then the next block is created and so on. The last bit in the block, sorry, it's getting a bit technical, is actually what's called a cryptographic hash of that page. So think about, I describe it as really old fashioned. You imagine old ledgers, books of ledgers with information in them of who you've sent products to and that. Imagine at the bottom of that page, you have to solve a puzzle, which is like a calculation of all the data in it, but it's a complex puzzle, cryptographically secured. At the bottom of that page, put a little signature that is unique for the data that appears in that page. That's what a cryptographic hash is. So it's a way of creating a digital signature. At the top of the next page, the first thing you do is you copy that puzzle value up to the beginning of the next page. Then you write all the ledger items in. Then you do another cryptographic puzzle of that whole page. That includes that previous page's thing. So now all of the blocks are chained together. So think about that, of blocks of data chained together, the blocks chain, blockchain. So that's where the term blockchain comes from, okay?
And that makes sense. It's almost, I had in mind, there's almost like a balance carried forward or a value carried forward, bringing it together.
Precisely that.
Okay.
But it's done in such a way that because it's using cryptography, which is one way, you can't reverse engineer it.
Yeah.
But you can easily validate that it's the correct answer. Then it's a way of securing the network. What it means is that it would take a massive amount of computing power to change any data in previous blocks.
It's very secure and reliable once it's hashed.
Correct.
Okay.
Yeah.
Okay. That's really, that's okay. Makes sense.
Yeah. And that's
once
why
it's hashed and once it's a couple of blocks deep, isn't it?
Correct. Spot on. Because if you think about it, whilst it might be complicated to change the data in that block, it's going to be even harder to change the data in 4 blocks ago.
Yeah.
Because you'd have to recalculate the hash for all blocks. So Elena's exactly right. Typically, you'll wait for several blocks to be verified before you treat as absolutely secure the data in it.
Which is why I suppose it's a chain. The value lies in the chain, not in. Yeah. Okay.
Exactly. And the really important thing as well is, I did say at the beginning, it would take an immense amount of computing power to make a change. So some people will say it's impossible to change data. I say it is possible, but if it happened, everyone would then see it. So it's a bit like having a seal that everyone would notice that something's changed. So it is tamper evident is the way I describe it. It's not tamper proof. So you'll hear people use the word immutable, and by immutable they mean it's completely unchangeable. It pretty much is, but conceptually it might not be.
Yeah.
Okay.
So
we went into blockchain on that side. We've covered off how cryptocurrencies exist. So Elena, probably because you're more into the blockchain side of things. So do you have particular questions around the blockchain and how it could impact things?
I'd love to know how the technology of blockchain impacted our business industry in general sense.
Yeah.
How did it change or disrupt the world economy?
So I'm going to offer that it's a little too early as yet to have seen any noticeable change.
Okay.
And I quite often describe blockchain technology in the same way that we have aviation. And aviation, you know, aeroplanes, helicopters, this kind, that's a form of technology. And what I find is that there are some parallels between the two. And blockchain technology at the moment, I think we're just past 1903 with the Wright brothers, with that first little aeroplane doing its early hops. And already you've got people saying, well, that's never going to fly around the world with 400 people on it, is it? You know, so we're at the very early days still with blockchain. And I think we're only just beginning to see the potential. So it hasn't had a world-changing impact yet, just like the Wright brothers in 1903 didn't change the way that we all travel around the world. But 100 years later, the default is you fly at 500 miles an hour around the world. The other thing as well, an interesting comparison with aviation, and this is where blockchain and cryptocurrency funnily enough comes into it, is that if we look at how aviation evolves, typically a very bright person comes up with a clever idea with an aeroplane. You know, okay, that aeroplane worked. What happens if we have two wings instead of one wing? You know, and they find some poor person to be a test pilot, and it takes off, and it goes, ooh, didn't work. Crunch, crashes, poor person dies, ambulance comes out, blood all over the place. Police come along, lawyers come along, government comes along, government says you can't do that again, and they put in place regulation to limit things. And so the industry then slows down, thinks a bit more, and thinks, okay, how about if we try two engines? Oh, that worked okay. Let's try three tails, have a crash again, more regulation, more litigation, this kind of thing. And if you look at aviation, aviation has evolved through these whole number of crashes, learning lessons, increased regulation, and so on. So we're now at the point where to fly on an airplane is incredibly safe. But the joke in the aviation industry is that the amount of paperwork to prove an airplane is safe has to be heavier than the weight of the airplane itself. You know, there's a massive amount of regulation and control. And I think we're going to see similar things with crypto, that we've had a few accidents already. We've seen things like the Mt. Gox hack a few years ago, where several $100 million was stolen. We've seen the DAO, which is a decentralized autonomous organization, where that had a hack and $50 million was stolen. There's all these sorts of things going wrong that the regulators and the government are starting to take an interest in. So there's a court case in the USA at the moment, to do with a company called Ripple and their cryptocurrency, XRP, and their platform. And the SEC, so that's the Securities Exchange Commission, is taking a great deal of interest in. They're saying, oh, that's a security, so it should be regulated. So I think we're going to see crypto and blockchains get increasingly regulated for a while. The good thing about that is that once these things are more regulated, it makes it easier for companies to then put their toe in the water and start using things like blockchain and start using crypto, because then it's a regulated activity. And they like regulated activity because they don't lose their licenses for that. So I think in answer to your question about, you know, how has it changed the world? It hasn't yet. And it's the yet that got me interested in blockchain and crypto originally, because when I started learning about what blockchain was, I realized fundamentally it's a software protocol. That's all it is. And that's what really excited me. And it excited me for two reasons. First of all, protocols are incredibly, incredibly boring. No one is interested in them, so they leave you alone, okay? The second thing is they are game-changing as well. So for most people, if I say to people, okay, so do you use a protocol called TCP/IP? Now, I know that both of you have got IT experience, so you probably do know what that is. But for most people, they'll go, what on earth is TCP/IP? It's like, well, it's terminal control program / internet protocol. So it's what the internet is based on. The internet has been around 50 years. And we've seen how the changes that's gone on. We look at another protocol, a thing called SMTP, which people may have heard of, which is email, and we look at how that's changed, and HTTP for the World Wide Web. So protocols really do change things. If you think about how much the internet has changed business and our social lives in 50 years, and how it's changed with the World Wide Web and that. So I think blockchain, with it being a software protocol, will have the same impact, if not more, but not yet. It needs a bit longer yet. So is that a reasonable answer to your question?
Yeah, absolutely.
There's a same question in my head related to that. So as it becomes more regulated, am I right in thinking one of the characteristics of blockchain is it's decentralized. It's not a centralized piece of software. It's not a centralized protocol. The architecture is decentralized and distributed. There's a cultural element to that in terms of a cultural element of the web, decentralized web versus centralized web.
Yep.
Now that's bringing some different words into the conversation, but decentralized and regulation don't always go hand in hand that easily.
Mm-hmm.
What's your view on that?
That's very true. And if we look at another area that's developing in the blockchain world, is a thing called DeFi, which is decentralized finance. And that is different to CeFi, or centralized finance. So you think about our current financial system is centralized across many entities. You've got these things called central banks, which operate at a national level and interoperate with each other. And then you've got, banks themselves who tend to operate across networks like SWIFT, which is one of the major payments things. So it's all centralized and it's all kind of hub and spoke. And it's all, controlled by the government or by the central bank or whatever. DeFi is the exact opposite. It's all distributed. There's no individual owner or control. It's all done by the community. It's all done by consensus. And so you're right, from a cultural perspective, you're switching from the, the government looks after me to I look after me. And this is the fascinating thing. This is why I started a crypto group originally, just as a social thing, because I realized that the difference between a bank and crypto is that if something goes wrong with a bank payment, I used to be able to walk up the high street, knock on the bank door, prod the bank manager in the stomach, and they'd sort it out. And admittedly, they are all now closing their branches, and so that's kind of going away. But there is ultimately someone who you can hold accountable or be responsible for. The crypto world flips it around, and you are the person who is responsible. So if something goes wrong, it's because you've made a mistake and you have to undo it. And a lot of the stuff, it's incredibly difficult. That's an interestingly different responsibility thing.
Well, it is actually, and in a way, the blockchain world is reflecting where a lot of the disparity in thinking of how government and such needs to progress in the future. We're such a large population globally that the drive for more sort of local community ownership and accountability and the devolution of governance and power. So it'd be very interesting to see how that plays out, but that's more of a political philosophy discussion / something else. But what that conversation's just led me to is, how do I manage and control what I have in the blockchain world? If the responsibility is on me, how do I get in and initiate something? How do I transfer or receive and realize value? How do I, if I'm storing, how do I store it securely and don't lose it?
Yep.
And how does all of that work?
So let's start from the beginning, because Elena, I think you've been through some of this journey already. That the starting point is you say, okay, I'd like to get into cryptocurrency. How do I do it? So the first thing is that you want to buy some cryptocurrency. Now, if you wanted to buy dollars, for example, US dollars, you'd go to a travel agent, a bank or whatever, and you'd say, hello, I'd like $100, please. They'd offer you a rate, you'd hand the cash over, hey presto, transaction done. Slightly different with crypto, that the first thing you need is what's called a wallet. So this is typically a piece of software that sits on your mobile phone or on your laptop or your electronic device. And that is a place, just like the way your wallet holds your credit cards, your bank cards, this kind of thing. It holds what are known as private keys, and we'll talk about those a little bit later. But a crypto wallet is a means for you to access the crypto world. How you access it is, instead of going to the bank or the travel agent, is you'll typically connect with a crypto exchange. So if I wanted to buy shares in a British company, I would have to buy shares which are traded on the London Stock Exchange, but I would go via a broker. I can't actually go to the London Stock Exchange and say, hello, I'd like 100 shares in British Aerospace. I have to go via a broker or somebody like eToro or one of the other online firms these days. They'd place the order for me, they'd sell them and everything like that. With crypto, you connect to an exchange, and effectively the exchange is a merging of a broker and a marketplace. So you can go on to an exchange. A couple of examples is Binance. So Binance.com, Kraken.com, Crypto.com, Blockchain.com. These are all exchanges. You connect your wallet to that, and that then allows you to buy and sell crypto. And just like you'd go into your travel agents and they say, you want $100, that'll be £85 or whatever. Now you can go in, you could say, I'd like one Bitcoin, which is $20,000. But you can actually buy a tiny bit of a Bitcoin. This is the thing that you have to remember. A Bitcoin can actually be broken down, just like a pound can be broken into 100 pennies, or a dollar can be broken into 100 cents. There are 100 million Satoshis that make up a Bitcoin. So you can buy a very, very small piece. The complexity of hooking to the exchange and buying your Bitcoin or your Ethereum or whatever is that, first of all, you need to put some fiat money. So fiat is traditional money, dollars, pounds. Fiat means it's Latin for let it be, and it's any government-backed currency in effect. You need to put some fiat money into your account, and then you use that to buy your crypto with it. So you put £100 and you buy £100 worth of crypto. At that point, you are now part of the crypto community. You've now got some crypto. You've bought £100. Typically, we tend to talk in dollars, though, which some of you may notice. Most people in the crypto space trade in dollars. So they just naturally do that conversion, but you can use pounds or dollars or euros or whatever else as well. So that's your initial exposure to that world. And then, just like when you come back from holiday and you've got some dollars left to sell back, if you want to, at some point, if the value of your crypto has increased and you want to realize that value into fiat money, then you can go back to an exchange and you can sell it back through the exchange, and the money comes back into your account in some way. Does that all make sense?
Perfect sense. I suppose the question that's in my head, I mean, we talked about an exchange, we talked about a wallet, and the wallet gives you access to an exchange, and the wallet is on a device. Is it bound to that device, or can you access it from multiple devices? And what's
so here's the really interesting thing, and this is the mind flip of thinking about blockchains and crypto. A blockchain, think of it as a database of account balances. So it says account number 1234 has got 1 Bitcoin in it. Okay, the wallet holds what are called private keys and public keys, and these are cryptographic proof that you own the amount that's in that account balance. So almost think of it like safety deposit boxes. Think you've got an amount in the safety deposit box, and your crypto wallet contains the keys to that safety deposit box. Really important thing here is that if you lose the keys, you lose access to that safety deposit box completely. No way of recovering it. So I work with some companies that provide the means of having secured copies of those keys and everything. So
I read an article last week, I think, as I was doing a bit of background to thinking for this conversation, about some chap who's lost a hard drive that has private keys that indicate up to about $700 million of currency.
Yep.
And he's rooting through a tip somewhere to try and find it. And he's been at it for months.
He's actually offered it. It's a council in Wales, and he's actually offered millions of pounds to be given the permission to go and search through it. Now here's the thing. If all the wallets, and the wallet can be software on a mobile phone, or it can be a hardware wallet. So, you know, here's an example of what's called a HSM, or a hardware security module. It's like a USB stick, but it's secured. That's the only difference. That's got private keys on it. If I've got a copy of those private keys somewhere else, then I could use that. So if he'd taken a copy of his keys and store them somewhere else, he doesn't need to go back and find that original hardware. You know,
basic good sanitary, right? It's just make a backup of your valuable stuff.
It is. However, remember, every time you take a backup of something, you're increasing the risk of that being stolen.
Yes.
And if someone else gets hold of it, so that's the thing. So this is why some cryptocurrencies use what's called a seed phrase when they're creating a wallet. A seed phrase it's a choice from 2,000 words, and you come up with a 12 or 24 word phrase that is a mnemonic that can then be converted back into your private key.
Okay.
So this is where you'll handwrite that on a piece of paper, and you go and stick that in a safe. If you lose your hardware wallet or your software wallet, then you just go back to the safe, and the wallet software normally allows you to just type in that seed phrase. You're back in business.
Okay. All right.
But that is a security risk.
That is. There's an interesting image in my head about this, Gary, because the applications for blockchain and the security and the allocation of responsibility, I'm not sure what they are yet, but there must be massive application for this across industry beyond its use now.
Absolutely. And this is sometimes, I mean, Elena sometimes asks about examples of blockchain. So you think about how we've been talking about cryptocurrency. I talk about the 5 mega cases of blockchain, and cryptocurrency is one of those mega cases.
Yeah.
So it allows the means of value transfer, but peer-to-peer. There's 4 other mega cases as well. One of them is the very fact that you've got this immutable ledger of records means that you can do things like product traceability. So the whole ability to track and trace, whether it's pharmaceuticals, whether it's food. So you've got the origination of where food has come from, fine wine, and so on. So I often use, there's a company originally from London called Everledger. And Everledger was set up from a hackathon, in fact. And it was to solve the problem of diamond provenance. So you think about diamonds, you know, they come out of the ground. And what Everledger did was that they identified that there's loads of different facets to a diamond, about, you know, the light that comes through and the angles and everything. I thought there's only one facet to a diamond, which is how much is it? It turns out there's actually lots of them. And it's funny that Will's laughing at that and Elena's got a straight face. But you know, they take what's effectively a cryptographic hash of the diamond. They store that on a blockchain, and then when the diamond goes and gets its initial polish in Mumbai, they do another cryptographic hash of that, and they record it to the blockchain. Then it goes to Rotterdam for final polish. Again, they do another cryptographic hash, goes on the blockchain. Then when it goes to Carnaby Street in London, and it gets set in a ring or something. Again, they record all that, goes on blockchain. You've now got complete history of that diamond, which means you can prove that it's not bloodstock, so it's not come from a sanctioned place. You can prove that it's not a synthetic, it is original, it hasn't been stolen, and so on. I love Everledger's story from that, because that is so simple to understand how you can use a blockchain for traceability. Then you extend that and say, well, don't think of diamonds, now think of fine wine or fine art or a vehicle, and all of those can be done through that. So that's the second, but big mega case. Then you've got things like digital identity, because again, you can hold information about people and their property. So the Estonian government has done this. The Estonian government's put all the citizens and all the citizen data on a blockchain-based platform, on the basis, as I describe it, if the neighbours ever come to visit for the weekend for the barbecue with their tanks and don't leave for a few years, then when they do leave, you've still got the evidence of who were your citizens, what property they owned, and everything like that. And it's interesting that when I've delivered a talk on this subject, and I was talking about Estonia, and then someone else said, "Oh, yes, my country has done that as well." Oh, which country is that? It's Georgia. So again, another of these satellite states who are a little bit nervous about Russia liking to come visit sometimes. So they've used it for digital identity. So that's the third use case. Fourth major area is around tokenization. So think about how we've now not just got a cryptocurrency that we can use as value, but we can put a software wrapper around it, a thing called a smart contract, that makes it programmatic in some way. So
is this where we get into the world of NFTs?
Yeah, exactly. So an NFT, a non-fungible token, is associated with what's called a smart contract. So this is a piece of software that sits on a blockchain. So again, the software is now immutable. You can see it can't change. And it keeps track of things like token ownership, or it might be used for other things like a trigger. So as an example of a trigger, I did some work with a company who are providing crop protection insurance in Sri Lanka. If you have a trigger of it raining more than a certain amount over a certain period of time, you can assume that the crop's been destroyed. So they have a smart contract that watches the weather, and if it rains more than a certain amount, it automatically pays an insurance claim to the smallholder.
Yeah. All right.
You think about how insurance usually works. If something goes wrong, and it takes weeks and weeks for the claims to go through, whereas the claim's gone through instantly. So from a farmer's point of view, that's phenomenal. So smart contracts.
It's almost like a stop loss in a trading environment. When you hit a certain threshold, just go, leave it.
And it works really well for what's called parametric insurance. Parametric insurance is like a simple if then else statement.
Yeah, very clearly defined, clear cut. It's either this or it's going to be that.
Exactly right. So you can build that using smart contracts, which is actually the fifth use case, that the whole concept of programmability. Or you can wrap all that and put a token with it, which is what NFTs are. So NFTs are used to represent ownership of something. And that's where there's been a load of hype around using them for digital art or for digital music and that kind of thing. And all an NFT is, it's effectively a digital receipt to show that you own something else. Yeah. It's not the actual something else. So if you've got a digital image, it's not the digital image that is the NFT. The NFT is the certificate to say that that is your digital image. And to a lot of people, that kind of blows them away, and they'd say, well, why would you want to do that? And what they don't realize is that in the art world, a lot of art is actually about bragging rights. So it's not about the physical ownership of the Mona Lisa. It's about the fact you've got a certificate showing you own the Mona Lisa type thing. Quite profound. So there are the five broad things where blockchain is beginning to be used. So in the insurance industry, smart contracts in particular are being used, and provenance as well. I think
that's really sensible. And I think to Elena's question of earlier, the disruptive element in there, I mean, that you can actually simplify an entire segment of the insurance industry to be much more efficient and almost completely automated once it's set up, and it just happens, so long as you can account for and predict for the value that's at risk, which you're doing upfront anyway.
Yeah, and that's quickly the point on that, and it links in quite often. The question I'm asked is, why isn't this being rolled out and why isn't this being implemented? So I actually ran a series of proof of concepts in the insurance sector in 2016 to do exactly that kind of thing. So to totally transform the London insurance market.
Yeah.
And one of the problems you find is that everyone is very excited about the potential it offers, and no one is willing to change their business processes to take advantage of it.
Or the culture. I mean, insurance specifically, you and I both know it's steeped in tradition, and they do it because they do it.
Exactly right.
Especially I enjoyed my time in the London market, but especially in the London market, there's more tradition there than in most other industries I've ever been in.
Exactly.
So the adoption, I probably would need to take something fairly significant to drive it. But let's throw another case into it, because as you were talking about the Estonian use for citizen data. What about tamper-proof electoral records?
Yep.
Why wouldn't that go from a count to a hash, to a rolled up count and a hash, to a central point, and you just know what the outcome is, and you can't change it?
So when the elections in the USA for the president in 2020, was it? I think now, were being disputed by Trump. In one of the court cases, blockchain-based voting was actually stated as a way forwards.
Yeah.
So as a concept, absolutely. And it's one of those things that when you look at it, it provides a completely tamper-proof, immutable means of recording things, which surprisingly, for some strange reason, some politicians don't want. Which is funny. That it's strange. Typically, you find the challenge is political, that there is kickback on it. So they did run an election, I think it was somewhere in West Africa, where they actually ran a blockchain version of the election in parallel with the official election, just to prove the concept, and it works. What you tend to find is you suddenly hit a more fundamental problem, which is about digital identity.
Yeah.
It's very easy to record that a vote has been recorded, and to make that tamper-proof, blah, 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 blah. Yeah. The problem is, how do you prove who that person is that's voting, and are they eligible? And this is where, again, in the US elections, the whole thing about postal voting throws all of that up into the air. And this is an important thing for people who are looking to implement blockchain. Blockchain just records whatever you give it. If you give it garbage, it will store garbage. The old garbage in, garbage out's not changed. And you usually find there are more basic problems, like validating the data before it goes onto the blockchain. Because once it's there, it can't be changed.
Okay, that makes good sense. So it's actually it's the engagement side of it, in a voting scenario, that would need to be really robust, and you'd need to be clear on. Especially, so one of the criticisms I've heard of blockchain is its lack of transparency. In that, it's actually a very private architecture. It's in terms of identifiability of people trading or using the blockchain. You can see keys, right? But
it's as private or as public as you design it to be.
Okay.
So you could create a blockchain, and that blockchain could have, Will Van Zyl sent Gary Nuttall €5 on this date, and it would show it as that. And if we were really going to be silly, we could include your bank account details, my bank account details, your home address, the name of my cat. You could make it as open as you wanted to. The thing with, as an example, the Bitcoin blockchain is that uses a feature called pseudo-anonymity, which is that you can see the transactions, and you can actually look using the Blockchain Explorer. You can look at the Bitcoin blockchain, and you can see it says that, on this date and time, this wallet address transferred this amount of Bitcoin to this wallet address. Now, at that point, you're right. We don't know who wallet address A is. We don't know who wallet address B is. But if we could work that out, if we can figure out who owns wallet B, then we can go into the blockchain and we can find every other transaction that wallet B has ever made. And so this is an interesting thing. Elena and I were having a conversation a few weeks ago about NFTs. NFTs are, representation of things like digital art and that kind of thing. And quite often people are now using the avatar associated with an NFT as their personal avatar. So you'll see people with like a CryptoPunk image or a Bored Ape Yacht Company gorilla or whatever as their avatar. But what they don't realize is that that avatar is linked to a crypto wallet address. I now know what your crypto wallet address is. Now, in itself, I can't do anything with that, but it is a little bit like you telling me how much is in your bank account. Because I can now go away and I can take a look at how much else has gone through that crypto wallet. So this is where a lot of law enforcement agencies publicly will say they hate crypto. It's all used for money laundering, crime, drugs, blah, blah, blah. It's all completely anonymous and we hate the criminals using it. Actually, they don't. Secretly, they love it because it's actually recording a complete audit trail of every transaction. And there are examples of drugs agencies and police forces prosecuting people and using the evidence on a blockchain of the transactions to prove that people were dealing.
Yeah. Okay.
Elena, conscious that you've probably got a few questions around the blockchain side of things.
Yeah, well, that's a very interesting session today. We talked how blockchain is in its infancy and the rules and regulations are only being created at the moment. We talked about some use cases, and now I've got an interesting question, and interesting to myself in the first place. I wanted to ask you, Harry, what about the academic side of things? Is blockchain being researched in academia right now? And who researches it? What are they doing? What are the trends? If anyone wants to start a project, how do they enter? What's your advice and recommendations?
Okay, so there are a number of universities who are heavily involved in this. I can recommend straight away for people who want to get a very deep understanding of new financial systems, including cryptocurrency and blockchain, then the University of Nicosia they're actually doing a master's degree in digital currencies, I think it is. Nicosia is very good. They've got a number of courses. I did one of the massive online courses a few years ago. Hands up, due disclosure, I believe I'm still a course ambassador, so I'm meant to wave the flag, but they are fantastic. They really go into great depth. They are an acknowledged leader, and they have lecturers such as Andreas Antonopoulos, who is one of the absolute gurus in the blockchain and crypto space. So they are very good. Estonia is a world leader in cryptography. And so if you're interested in more in the mathematics and the securing of data, that kind of thing, then Estonia University has got a very good reputation. In the UK, Oxford University runs a blockchain course that I haven't been on. I think it has improved a lot from how it was originally, but they do like they've got like a blockchain business school type thing that they run now.
There's a blockchain strategy course, I think they have.
Yeah.
How to think about it, where to apply it, and
they've kind of evolved it a little bit, because I think the challenge originally was that they covered the theory but not practice. Okay. But now they've got a lot more of the practice. So Oxford University are good. There was another one that was springing to mind as well. So it's only Arizona State University. Arizona, I believe, received a bequest when somebody died, and they have created a blockchain campus or something because they got millions and millions of dollars, and they're actually running an on-site campus. So if you actually want to go and travel somewhere, then Arizona State University, I believe, is to be recommended on that. So there are some specific universities that are certainly getting into it. And there are others that I think are doing more the general digital currencies, cryptography, this kind of thing. Yeah.
Thank you. Thanks.
Interesting that Estonia is up there, given so they seem to be very capable in the cryptography space and mathematical space. They seem to be an early adopter of blockchain and citizen data, which is great. But years ago already, they had digital citizenships and such. So thinking down the line potentially, and probably would be a nice one to watch in terms of uptake of something broader.
Yeah. In fact, sorry, I think I called it Estonia University. It's actually Tallinn University.
In Estonia.
Yeah.
In Estonia.
Okay.
Yeah. But definitely recommended.
So I suppose the interesting thing for me here is what I haven't considered. I didn't actually think about asking this on this call at all, but the growth and the rate at which new currencies, and let's just talk the cryptocurrency one, have come into being, and just the breadth of it. And let's take it and fully appreciate this isn't an advisory bit or such, but I'm looking out there and I go, which one do I choose?
Yep.
How? But especially if I look at it, this isn't a game for someone who's looking for a linear increase day by day, right? You've got to be able to sit there and go, okay, I have a little bit of money in there. So just from an investment and value storage and value creation perspective, forget the transfer for a moment. Buying, and I want to see the value grow. Lovely. Put some money in and it's going to be doing this. Right. Hopefully it's going to be doing this and not this, but it might very well do this. Like we've had a big reset down in overall market cap and value. Now, where do you think it's going? So we don't have to talk about the value side of it, but talk about that in terms of, we can talk about that in terms of what's the sentiment and buy-in and future. What does that mean for the future of blockchain and crypto as a viable currency? Okay.
So my starting point, because I keep hearing people talking about crypto winter and bear market and all these phrases that ultimately what they mean is that the price is going down.
Yeah.
Now, I think that actually that the crypto market valuation currently stands at around about $800 billion. So two things on that. First of all, that is significantly less than the $2 trillion it was 2 years ago, which means that there's been a collapse in the valuation. And the second is that means compared to traditional financial services, it's tiny. And that's why it's got the potential, because it's the equivalent of like 1% of the financial services market at the moment. Now, what I'm seeing is that even though the value of the market is decreasing, the adoption and usage of it is increasing. So it's a little bit like I describe, you think about the stories of the gold rush in California, where you had all these people who piled in, they thought they could mine for gold. Most of them went out of business, most of them went broke, most of them went home. But what happened at the same time was that a complete new infrastructure was built.
Yeah.
So the railroads came about, houses came about, schools, the hospitals, the whole capability, and that lifted everything up. And this is what I'm seeing with crypto. So even though the prices of the cryptocurrencies are going down, the marketplace itself is growing and emerging. Yeah. So originally you had cryptocurrency, and that was it. Then you had cryptocurrency, and with Ethereum in 2014, 2016, you had smart contracts, which meant you had programmable money. Then you had ICOs, initial coin offerings, which were tokens in 2017, 18, which allowed you to raise funds for companies, or that's how people used it. Then you had DeFi, now we've got NFTs. You've got these constant waves of innovation coming on that are all reusing what was previously left in place and are building on it. So I think we're in a very exciting time. And this is why I think appropriate regulation will absolutely make this market explode. And again, not financial advice, not investment advice, blah, blah, blah. But I think crypto is at 1/10, if not 1/100th of the size it will be in the future.
Yeah.
Now, I'm not going to say when in the future, so I can hedge my bets. But I think the future prospect is massive.
Yeah.
Now, in terms of specific cryptocurrencies, this is again where it's, don't want to offer financial advice on that. Bitcoin still represents, I think it's 46% of the total crypto marketplace. Ethereum's about 17%, and then there's the rest, the other altcoins type thing. Bitcoin seems to be the safe play. It's the one that you can always go to for safety type thing compared to others. And when I've looked at cryptocurrencies over time, I've compared the performance against Bitcoin. Bitcoin has always kept at pace, if not better.
Yeah. Okay. And just you used the word adoption earlier. I mean, the currency is being adopted, so that the type of currency, the cryptos, and even PayPal now has an option, I think, to be able to pay using crypto. And I think it's limited to Bitcoin and Ethereum. I don't know. I might just completely be making that up. The other question that's related to adoption and I suppose decision making about the credibility of a currency is, if I'm looking to buy into, if I'm looking to buy currency, effectively I'm looking to buying into that instance of a blockchain, right? And that's what I will be buying into. Does that then go to fund the further growth and adoption and spread of that blockchain? What does that actually do?
Yeah, so this is where it's funny, where I see people saying, "Oh, I love the whatever cryptocurrency or whatever blockchain, so Ripple or whatever,
Yeah.
and I'm investing in it."
Yeah.
That's a little bit like buying a can of Coke and saying you're investing in Coca-Cola. Yeah, you're just not. It's a different thing. By using it, adoption in terms of use makes it more popular. That's likely to lead to increasing in value, but there's no guarantee. The thing to watch out for with cryptocurrencies is it comes down to is it a credible platform? Has it got a good team? Has it got a team of people who know what they are doing? Or is it a bunch of fly-by-nights who just took a copy of the software, created their own version of it, and have spun it off, and have created it, I've called it sushi swap or something.
Yeah. Okay. That's cleared that, because I'm not now going to take a branch from somewhere and create something called the Kitty Hawk based on your aviation analogy, although that would be a damn fine currency, Kitty Hawk.
I like that. I'm conscious of time and the fact that my dog is barking like mad in the background at the moment. So I'm going to quickly ask you if there are any final questions or thoughts from either of you. Elena, perhaps?
It's been an educational hour for me.
It's been incredibly interesting for me, understanding the blockchain, how it works. Those use cases for future adoption and use are, I think, I'd be really interested to see how that takes off, because the non-currency adoption of blockchain can only reinforce the credibility of the currency application of it as well. So if it becomes a more widely used architecture generally, it'll a bit of a contagion benefit. Contagion is not a word we want to use too much these days, I don't think. But
I have done a number of use cases of how blockchain is being used to track COVID, actually.
Oh, really?
Yeah, there have been a number of cases with that. There's Ping'an in China. We're using blockchain to pay out medical insurance claims, COVID claimants.
Okay.
There's been one which is tracking DNA strands, which uses blockchain. So there are kind of connections on this.
Oh, brilliant.
The other key thing as well that I keep emphasizing as a blockchain evangelist as such is that blockchain will be successfully adopted when you don't realize you're using it.
Yeah.
That's the key thing. You don't need to know it's there. So what I suggest with that, I was going to say thank you very much for your time and your questions. It's been really interesting. And we'll close the session off there.
Yeah, well, thank you to both of you. Thank you so much.
It's really lovely to meet you, Elena. And Gary, thank you. When we spoke about this a couple of months ago, I kept it in the back of my mind. And shortly before you sent that note through, I said, I wonder when we're going to do that. It's really, really interesting conversation, and your knowledge is impeccable. It's unbelievable.
Excellent. Have a good one, folks. Bye for now.
Thank you.
Bye.
Bye-bye.